Call it a minor miracle. The Fed actually calmed investors' jittery nerves after its most recent statement. Very interesting to see that the Fed did not use the word deflation in its statement. Few expected that the central bank really would put that word in there because it would really freak out the market if it did. However, I think stock investors at least were encouraged by the fact that the Fed didn't really change its language, its expectations for inflation all that much. And I think that was kind of a code, a signal that it's not that worried about deflation. So that's one reason why I think stocks, which have been trading much lower before the Fed announcement, moved off of their lows, were briefly actually in positive territory. On the flip side, you also had bond investors that were rushing into treasuries on this news as well, which doesn't always happen that you have bond buying and stock buying after a Fed announcement. What's happening here is that by buying more long-term treasuries, you can keep yields down, long-term rates stay low, and that's something the Fed is trying to do in order to keep the housing market relatively stable. It's quantitative easing policy, as it's known in kind of econo jargon, which is basically a way to keep rates low without actually lowering interest rates. Inflation hawks, again, unfortunately, you don't have a majority of the Fed on your side, but there's at least one guy. KC Fed President Thomas Hoenig continued to vote against the Fed's use of the terms keeping rates exceptionally low for an extended period of time. We'll see over the next few months. Maybe he will have some other Fed members that will join in that dissent. So the Fed, in a rare bit of calming all investors of various stripes, seemed to please both stock investors and bond investors on the same day. Don't expect it to happen again anytime soon.